you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So we put that Asian update for you, and we talked about that golden pocket point of control reaction. We said watch out for it, and we're here for it. And we also had those 5s and those 6s appear briefly for our indicator. So we pulled the trigger and entered along there and took it for some profits. We already locked in some, as you do, and set the stops into profit as you do. So it's a win, and we're here for that runner to see where it goes. So are we going to the liquidity pool up above? Let's go and check out the liquidity. Let's just do what are these lines here? This is the mean reversion path to the upside of the pitch fan that we had the price in since January. So we saw a rejection off the 0.5 equilibrium of that mean reversion path and started to retrace down into these regions. So let's go see where we can go with the liquidity on High Block Capital. What is High Block? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss. And with High Block, we get to see where those crispy characters are. So let's go and do that now on the 1 minute time frame. So we were talking about earlier today about this $145 million pool of 50 extras at 29,753 and saying watch out for those guys. They might come back to them after they fatigue off of some of the liquidity here. They came down to this $75 million 100x pool and gobbled them up without hesitation.
Fatality.
And that's what happens when you don't pay yourselves. So they got some of the liquidity of the 50xers, $101 million also off the table of 50x characters. And as they go up into the liquidity, making their ascent to this 29753 potential region, we are pinging in some longs to the tune of double digits here, largest being 67 million down at 29421. So they could be coming down to 29421 at some point after fatiguing off of the short liquidity here on the 1 minute time frame. Let's go expand our vision to the 7-day and see where the imbalance lies on the 7-day time frame. Shout out to anyone that may be watching. So let's take a look. So we previously took out for nearly $5 billion here, and we're looking to potentially rise up to that 29.8550 region. There's $3 billion up there on the 7-day time frame. However, the imbalance is to the downside here. In the 7-day time frame, we could come back down to the 28.950 region after fatiguing off the liquidity. Remember, it's false move Monday. The move for the week may not be what's happening today. They may be just establishing the high for the week, and then the low is yet to come. So just keep that in mind as you set your stops into profit and consider trimming. Alright, so let's go ahead and take a look at the monthly time frame. The monthly time frame does have this insinuation of continuing to 30,500 at $16 billion up there at 30,005, 12 billion up at 30,004. So you got nearly 25 billion up there in that region. You got that 29.9 region, 6 billion rather. And yeah, down below you got double digits in the tune of 40-50 billion down to the 28K region that we could retrace back to at some point as well. The imbalance looks pretty even Steven on the monthly time frame. You got liquidity pools on both sides. As you start to expand your vision to the 3 and the 6 month, you notice the pools beneath 25K that are in double digits of 65 billion plus, and the entire path paved to the downside. So the imbalance on the 3 month and the 6 month is to the downside on the liquidation heat map here. Most notably, you got 142 billion and 180 billion at 24.6 and 24.3 respectively. And then you got 122 billion at 24K even, and all that liquidity down below. So at some point, are we going to retrace down into the pools? Most likely yes. When will that occur? I have no clue, but I'm here for it either way. Let's go into the 2-year time frame. This is where we are starting to see the external liquidity pools of the ranges back in May of 2022 that are still potentially open. I think they only issue liquidity that is still on the table. So there's people that are, the short funding is paying for these trades, so they probably made a pretty penny and scaled out, and they're at break even. But still, there is some $194 billion up at 32.4, 188 billion at 32.8, and 197 billion at 33.2, nearly $600 billion up to the 33.2 range. So coming up to this region and then fatiguing for that deep retrace before the halving could be something to think about. We've been talking about that as they build the pools. Let's go back to July 13th. They had 175 billion at 32.4. Now they have 194 billion at 32.4. So they brought in basically $20 billion since July 13th. If we do the same thing down below and we see the 229 billion at 24.4, and then we go to now 240 billion. So not nearly as many longs to the shorts. So there's been 20 billion to the 11 billion in longs. So there's 9 billion deficit in short liquidity that is being pinged in on the 2-year time frame more than the longs. But you have the largest pool down here at 24.4 with that $241 billion mark. So do you come down to the $700 billion sub 25K, or do you go up to 32K and grab this first? Talk about rock and a hard place. A lot of liquidity on both sides. Even when we were back here in November, we had liquidity to the tune of 150 billion up at 23.2 in November, and they went back for the larger pool down below and that was a easy ping of the liquidity. There was larger pools below. Here it looks like you're pinging cumulatively more above, so coming up to here and fatiguing before you come below makes more sense to me. However, you got these entire regions down here in this bull market, but we are in a bull market, so these may be protected positions of the market makers, as I've said before. So let's go back to the monthly, see where we can ping off the liquidity. Once again, you have that $30,516 billion range. Do we continue to drift higher to that on a Monday, or do we fade out at that 1 minute pool? Let's go into the Binance chart and throw on our oscillators and see what's up. Shout out to anyone that may or may not be watching. All right. So during the Asian session, we put out this projection to the upside. We talked about a retrace. I switched this over to a deep retrace because we had the golden pocket violated down to the 706. So we basically had a 706 bounce, not a 618. We previously saw a 618 reaction and then it stalled out there. So deep retrace was in order. So we switched this to deep, and we're looking for the 786 or the 886 possibility, but it held at the point of control for this local range and bounced out of here. So let's throw on our oscillators and see what's going on. We can remove this from last time, see if we're going to continue. It looks like we're reclaiming the 236 of the bullish trend-based fib level to potentially come up into these regions if we can maintain 29,628 as we stated earlier. So let's go ahead and throw on the oscillators. Momentum Master, link in the description for more. You can scroll down the features, toggle at your leisure, looking at the oscillator with Bitcoin at its local bottom, or seeing each of the components as we go over them and they come into prominence. So the 4-hour cloud, we had this weird break beneath the cloud and bearish retest and drop to the downside. We were talking about how the stab breaking beneath the cloud, normally when the strength, you hold the cloud and pierce up. So this insinuated the drop to the downside despite having this 6 time frames oversold here. But we took the bounce for profit, and then we got stopped in profit, and then we re-entered into profit and took some trim and stops into profit. So we win either way. So let's go ahead and take a look at the time frames that are getting overbought or oversold. We already did a thorough daily time frame analysis, but let's just do it again to be thorough. So we talked about how this daily cloud was curving here in a manner. However, with that drop down earlier today, it did curve in a manner here. So this insinuation of a reversal is still not yet bound, and this daily cloud comes right to the liquidity pool that we're looking to come to. The last time we stabbed at the cloud, we had tweezer tops on the daily and continued lower. So are we going to pierce this cloud and hold it? You'd have to stave off the momentum and start to see a curvature. This is why we put this curvature here like this. You need to preempt that curvature for a market reversal to occur, similar to back here in June basically, when we had this curvature angle insinuating the bottom was starting to come in. Are we starting to see that dump idea come in? Not just the end of that, is the angle is not yet insinuating that we are done with going to the downside, but the volume has been slight and getting less as the cloud thins. What is this trend cloud? Well, it is a volume weighted cloud formula which expands and thins according to the amount of volume present in the asset, using a 𝗥𝗲𝗋𝗁 formula for the clouds here. And so you're seeing this thinning expressing that there's a potential expansion inbound to one direction or the other, and then you'll see the cloud thicken up at that point. If we go to the daily time frame, the KD lines and the money flow and the RSI starting to bounce off the 50 level, are we going to see a rise up on the daily time frame? We are in Monday, false move Monday. We are still in this range too, so I'm not necessarily buying it, but I'm here for whatever profit they may give to the upside here. If we go into the 12-hour time frame, the 12-hour time frame did have a blue vector candle, which is a stop vector candle, not green vector, so not significant volume, but more significant than the weekend, that's for sure. Getting the RSI to come above the money flow, we could still see the money flow come up here with the 12-hour time frame as the stochastic RSI gives us potential takeoff. The cross down event on the 12-hour looks like it could be negated here in 7 hours 45 minutes. Do we hold this candle close above the 29628 bullish trend base fib level? That is the question of this 12-hour time frame. Where does it close? You got 7 hours and 45 minutes for that to happen. On the 6-hour time frame, what was your insinuation of upside? Well, this green vector candle on the 6-hour was a bullish sign off the point of control, coming back into that range here, holding the bearish trend base fib of the 786 and starting to come back from that point, reclaiming the cloud after the suppression of the baselines. What are the baselines? Well, they're your first signs of reversal. You can see we were talking about how these cross down events here with the helixes give you this potential suppression of price, and until you start to cross them, which we're now getting a cross up, which in 1 hour and 44 minutes, if this closes in a bullish manner above this 236 and you get this cross up event, you could see a continuation. What you need to see for a true move to the upside would be some conviction to the upside and closing these higher time frame candles in those states above those levels. Going to the 4-hour time frame, you got the 4-hour time frame closing beneath the 236, not what you want to see for the bullish idea. So the next 4-hour candle in 3 hours for 43 minutes will be what we need to look at. Now we're getting the Williams in a position here with the rising sun event, and this coming up with the golden light momentum. This is what you want to see as a condition for monitoring your trade. If you take the long and you see these angles of the golden light passing over the horizon of a mountain, so you need this mountain peak for the golden light to pierce your eye and take you to the upside. And we had money flow divergence here, which triggered the stop loss hunt. Money flow divergence, stop loss hunt, and we're out of here. And so normally we notice that many times you get money flow divergence, stop loss hunt, we're out of here. So you take that divergence, wait for the stop loss hunt, the liquidity grab, and then boom, take it to the upside. Same thing with the bearish divergence. You get bearish divergence, stop loss hunt, drop it to the downside. So it's the liquidity grabs coupled with the imbalances here. So we had you at hello when we saw this $145 million pinged in shorts as opposed to the 75 million in longs, and they went and took out the 100x shorts and then the 100x longs, and then they said we're going for you 50x shorts now, and then they are going for the 50x shorts. It's just a ping pong to both sides of liquidity. That's how it works. It's a game of traps, folks. Game of traps. So we're going to look at the 4-hour time frame. The cloud is acting strange here off of these 3 vector candles. You had green, red, green, and then the green. They were trying to psych out both sides, but they did not psych out yours truly. We were seeing the 6 time frames oversold, and we talked about it this morning, how these signals are not to be ignored on the stochastic array. Normally that is very strong for upside momentum, so that's why we just took that play for what it was worth, especially when it started coming back above the adaptive moving average and the point of control. Those were your clues for upside for today. One of the easier convictions to take I had today. It was not so much fake out tomfoolery to me. And yeah, looking to the hourly time frame, we came back, reclaimed the cloud, and continue. And if everything's fractal in nature, so this is what you want to see on all time frames. So we'll zoom in for you. Basically, the hourly time frame, you come out. Basically, it's a ABC, but you come out here and then you retest, and then you could continue. So could we be continuing this C wave up higher? What do? You pierce the cloud, which is previously bearish. It started to thin. You got an hourly candle close about 3 hours prior. So even if you hadn't entered back here, you had another second entry right here. And this second entry was when this candle closed in this manner above the baseline. That was giving you a clue about what is potentially in store when we tried to break it and could not, and then came back above this thinning cloud, the purple cloud thinning, and boom, we took it to the upside. We were in back over here somewhere beneath this candle, I believe, as it started to come back up again. And yeah, so that's how it works. And then you could also take trend-based fibs to measure your profit targets, and this will also line up with the liquidity most likely. Yeah, coming up into that liquidity character we have mapped out for you, the 50x target. So coming up into that 755 region. And that's it in a nutshell for the Monday analysis. Where do we go from there? How do we hold this? If you start to see bearish divergence in this region, then basically we could be heading back down into the 28.2, but we have that already mapped out for you as well. Where are those levels? Let's go back to that real quick. You have a 618 bounce potential down at 28.152, and you have some liquidity down in the, you have the point of control at the 28K region, and even lower you have some 706 deep retrace at 27.694. Over here I'd be waiting for more confirmation. I would not limit order in there, but you could see a reaction off the 618 at 28.152 or 65 if you at 27.985, or the 28K region if you are more conservative, if it does fatigue out there. All right, so we're going to do a little bit of a segue here into what we saw going on in the NASDAQ just a moment ago, and what trades we took and put out using the 𝗥𝗲𝗍 indicator that is under development with Momentum Master, and given early access to the Momentum Master people. So if you're into that, you can be taking these kind of ideas for how we saw this bottom form into the open, and we can show you timestamped things that we put out to the group in advance. So we're going to do that for you now and zoom into this real quick. Take the 𝗥𝗲𝗍, turn it on. Alright, so here we go. So what were we looking at? So before we had the C leg down before the open, we were around here in the open. We were seeing some fib levels. We'll pull up the charts for you here. We're going through the daily time frame and how the suppression of the cloud and how we've been dropping basically over the last week. And we were talking about the baselines crossing down here and the suppression of the 12-hour being strong. But we were saying we could see a retrace into that drop to set a high for the week at some point. So we were looking for a long position. However, we were not quick to jump in. We said here that we are going, if we go up feasibly a stab to that 786 would sweep the range before sending it. And we were looking at the liquidity and the point of control and all that stuff. And so we were looking for the C wave down, and our indicator 𝗥𝗲𝗍 was saying do not enter long, do not enter long, do not enter long, and was giving the insinuation of downside on the 1 minute. The money was flying away, and we said note the do not enter, and the C wave continues, says one of the members. Boom. And then we got this move to the downside. We started to see bullish divergence on the towards the open. They did fake out number 1. We did not take that. We saw the pivot number 2 from the bottom with the bullish divergence. We took that for 25 ticks, and then we reassessed off of the cloud. We said rejecting here and potentially kissing the cloud, watch for the pullback. And sure enough, it pulled back with some bearish divergence, and then we looked for a long off of that cloud and a C wave continuation idea. Took it for 124 ticks and was done for the day. So we're going to go into that in detail here, and how you could trade this if you are a Momentum Master trader, and how you can grow growing number of funded traders using Momentum Master. Let's go ahead and take a look at the 30-second here. Oops, sorry, this should be the 1 minute, and then we'll do this 30-second, and we'll do a quick analysis of what's going on. So going into the open, it's very hard to predict, and not only that, it's a Monday, so you were seeing some bullish divergence which played out into some bearish divergence, hidden bearish, which played out, and then we were seeing a higher low on this oscillator here, and this is where we took the pivot off of this Fibonacci level and took it for 25 ticks up, just as a test for Monday, just to get in our feet wet. And then we went a little bit harder here for 124 ticks off of the cloud idea. We're seeing the money come back in on our Optima here, and it was also confirming on the cloud on the 1 minute. If we zoom into the 1 minute here, you can see the 1 minute cloud was a retest level here, and you were flipping the potential weighted moving average here, and then we saw the money flow back in here, and then we started to pull the trigger. So we saw the flying away of money disappear, and then we pulled the trigger here and took that for 100 ticks to the upside. We frugally got out at the fib level, but you could have re-entered off of the cloud at any time, and it just rode up and up and up and up, and the cloud held true the entire time. If you had a runner in, you would have been handsomely paid on that trade. Shout out to anybody who took that. I had to put out some other things and whatnot, and I'm very frugal, so I just took the measly 124 ticks. But that's how NASDAQ operates. I believe somebody, Rainier, is doing an update for the NASDAQ as we speak, so we'll just leave it there and just say that, yeah, link in the description if you're interested in playing these optimized time frame oscillators, which are never before seen, which give you the bearish divergence and bullish divergence before it even knows it's divergence. Let's go back to Bitcoin, and yeah, I think we put Bitcoin in a nutshell, really. Like, it's going to go up to the target most likely, and either way, we're here for it, coming to that 29,753 zone and stopping off the liquidity. And what does it do there? Does it go all the way up to the 30,000, continue to the 30,000 target? We watch how it resets the oscillators and whether Tuesday, Wednesday is going to continue higher or not. Simply put, based off the liquidity on the 100xers, they will likely retrace into some of the pools here. If we zoom in, we can see that there is $76 million which opened up into the resistance here, so they could easily come back to this 100x pool without hesitation at 29,465. I wouldn't be surprised. And that's about it, folks. Short but sweet. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff.